What's going on, everybody? Welcome back. If so, it's another market update video here. I'm Benjamin, and today Bitcoin and the S&P charts. But before I get right into the market, please leave a like, drop a comment, and if you can subscribe, I'd really appreciate it. Honestly, there has been a lot going on inside the market. It's actually unbelievable. We did end up retracing and rejecting off of our top resistance for almost across the whole board. So it has been very interesting to watch the market for the past few days. I do apologize for not releasing a video the other day, just realistically because we've been consolidating. Towards the end of the day though, yesterday, we ended up falling. This is why there's a video today. But looking inside the market, we're gonna go ahead and take a look at basically everything. Today's gonna be a long video, just going over everything that happened. Too many things have fell. A lot of people are worried, but however, if you go in and if you tuned into my last videos, everything hit where I had said for if we were to go to the downside. If we were to trend to the upside, excuse me, we had our targets, and if we trended to the downside, we had our targets. As a trader, you want to do what the market does. You don't necessarily want to chase it. So do A if A happens, and do B if B happens. That way you can always make money, you can always stay profitable, and you're always okay. Right now I'm still holding a trade because I am not necessarily anticipating we reject completely, but if we end up doing, then I'll close it. Right now I'm at break even just because I've been shorting on the way down. But I did hold one lot, and I believe it's on Ethereum. But before we jump into that, I'm going to show you guys everything. We're going to start with the S&P 500. But jumping in right now, we're on the monthly, as you can tell, and we did reject off of our 4,200 level. Obviously, like I said, that's where we were. That's where our ceiling was, excuse me, and that's where our 20 moving average is as well. As we also got rejected off of. Coming and finding support around the 40,000 or 4,000, excuse me, for the S&P 500. Right now, retesting, you could say that we're retesting the top resistance, which has now become support for our push up if we are going to continue to the upside. If not, and we continue to the downside, this is a GBI setting up, and we can see another leg down. However, since we did trend up and outside of our descending channel right here for the monthly, right now we could be just testing some support, getting ready to launch back up. This could be an RBI setup, and we're getting ready to launch. Hopefully, if the Fed, realistically, the reason why all of this is so bad is because of the Feds and them and our interest rates. Realistically, the reason we ended up tanking down is because of news and the downside of what's going on. Interest rates are high. We're still battling around the 5 to 6.5%. Realistically, we're trying to get to the 2%. That's not necessarily great because with February CPI, I mean, hopefully, it comes out lower, but January CPI was pretty intense. We didn't like what we got off of that, and it ended up putting us back into, I would put in quotations, a bear trend, just because we are trending outside of it. A lot of people are saying we're still in this bear market. I agree and disagree, just because the market has been doing what it wants, and based off of emotion and based off of news, it's kind of just reacting how it wants. There's a lot of ups and downs, a lot of manipulation going on right now. We're in a very interesting time for the market. But realistically, if we can get back to that 2%, we'd be doing phenomenal for the markets. However, unfortunately, we have to wait for the February CPI data, which we're going to get next month or within the next. We only have a week, maybe 3 days left inside February, so we will get that CPI data report next month, probably the first week. However, since all of this is happening and we have the high interest rates, the Feds are going to come out, the Federal Reserve, they're going to come out and they're going to start tightening, they're going to start getting harder on stuff, most likely. And if we didn't see that February dropped at all, then they're going to, of course, come back tighter, of course, come back harder, and end up making it harder for us. And it's not going to be really too well. They're going to end up raising a few things, and it's going to end up they're trying to get the interest rates down. So if they end up doing all of that, it's going to end up hurting us in the long or in the short term rather than the long term, and it's just because they're trying to squeeze us back to that 2%. But realistically, it's going to cause some pain for the markets, as you can tell as of right now. However, diving into the weekly, just to show you guys in more detail, we are getting ready for this squeeze. It looks like this cross is bullish cross. However, I believe that they are trying to attempt to flush as many people as they can out before we end up going to the upside. It's very unfair, very unfortunate, but if you can't see this and you don't recognize certain patterns and you don't see that there are manipulation inside the market, you will get flushed out and you will get liquidated, excuse me. However, right now, like I said, momentum is clearly to the downside. We do want to find some sort of support somewhere. So if we can't find it at the 4,000 level, best believe we will find it around our indicator, and if we break through this, then we are definitely going to head down to our lowest supports. We do have one around 3,800. and we do have one at around 3,500. So it's definitely going to be an interesting few weeks, if anything, few days to see where we end up trending. If anything, at least this end of this week, today is only Wednesday, so seeing how this week closes and where we end up closing is going to be definitely an interesting play. However, diving into the daily right now, you can definitely see that we are tapping some indicators, our 50 moving average on the daily, hopefully giving us some sort of support just to push us back up. If not, like I said, we will be trending lower and then most likely end up tapping our 200 moving average, which isn't necessarily what we'd like to see, but this is the outcome that we are facing as of right now. Just to give you guys a little more in depth real quick on the 4 hour, you can tell that we have that GBI spiking through right now, most likely trying to come and tap for some support. However, we are breaking that, so if we end up breaking this and closing below it, yeah, best believe we're not going to have the most fun time for the markets as of right now. We did trend very hard to try to get up here and then got super rejected off of that 4,200 level, which is, like I said, not the best at all. However, let's dive into something else. The S&P 500 we got covered so far. It's not looking the best, like I said. We won't check on NASDAQ just because it is very similar to the S&P 500. We could do, we'll jump into Ethereum just real quick for you guys right now, just to show you guys. Like I said, I am holding a bit of a big play. A lot of people were screaming that I'm insane for this, but honestly, I'm just realistically waiting to see if we end up attempting to try to come back up at all. Like I said, I ended up shorting with my GBIs all the way down. So I'm not necessarily under right now. I'm more around break even. I might even be in profit right now just because I did so well on the shorts. However, if you guys do end up looking, the monthly is not doing phenomenal. We do have, we do have a lot of good momentum. This is a great bullish momentum, but like I said, we never broke that bull 180. We never broke this bearish momentum that's pushing us to the downside. Unfortunately, if we can't break that and we can't seem to break these 1700 levels, we are going to get shunned down to the downside, and that's not going to be great at all for the crypto market or Ethereum, as well as what the Feds are doing and as well as what the world is going through as of right now as a whole. It's just not really good news and good momentum for the markets at all. However, we can dive into the weekly real quick just to show you guys. Definitely coming back down pretty hard, definitely squeezing as far as you can to try to come back down, which isn't the best. We might even squeeze down all the way to 1600, might even wick through it and then find support at 1600, because I do believe that we won't continue too far. If we do and we have a massive sell-off based off of news of what's going on and everybody's panicking, then I do believe we will end up coming in contact with our indicators again to try to find some sort of support. But as of right now, realistically, I'm looking at the 1600 level, and I will be taking halves and wholes as I go down, just to find some support on where we could end up landing. But as of right now, 1600 is my floor. 1650 was more of my entry play zone, as well as 1700. I did get a few plays above 1700. I'm stuck in one right now, like I said, just because I'm holding. I could have cut ties a while ago, but I'm a little hard-headed and stubborn sometimes, so I do believe that there is a bit of upward momentum still. I do believe that this is a flush tactic and people are trying to get flushed out right now. So we will see how everything goes. If we continue to go to the downside, like I said, I'll just continue to short. I don't ever take out in losses. If I do, it's because I messed up. But once you get your own analysis down, you really minimize your mess ups and your losses, and you end up getting the flow down and understanding when you should put money in and when you shouldn't be putting money in. As of right now, I'm just kind of waiting to see more data to see what I should do for my play. Just because we haven't necessarily rejected too hard. We still are floating around these areas after fighting aggressively. And once we came back down on the daily, as you can see, we aggressively shot right back up, equivalently as to how hard we shot back down. If anything, these were stronger bars than what happened over here, almost similar. However, we did end up, after spiking several times, like I said, the longer you consolidate on a resistance, the longer you consolidate around an area, the longer we hang out, the more likely chance it is that we fall. Of course, obviously, that was 4, 5, 6 days, and then we ended up tanking. So it was a week that we consolidated. It was too long. We didn't have enough momentum. We had to break to the downside, which is why we ended up shorting on that bull or bear 180 right here. Got in right there, ended up closing at 1650, and then right now we made a short one, but down to 1620. But we didn't really, capitalize on that as a huge one, just because you don't want to get caught shorting or trying to short the market if there was just previously bullish momentum. I always look to the left of myself. So right now I'm starting to look to the left, since there's not really too much to our left now because of what's happening. The trend seems to be reversing because of the bear 180. So now I'm looking to my left, and the left right now, the only energy and momentum we have is bearish and downside. So as of right now, I'm looking to short. So once we hit my half, I shorted back into it, 1650 to 1620. I did expect us to stop at 1620 just because of our indicators, and possibly 1600. If we had enough momentum, we would stab through that and go to 1600. If we break in, close below it, like I could check on the 15-minute, then I definitely would go and continue to 1600. But I'm here making a video for you guys instead, just so you guys are prepared of what's going on. But other than that, that realistically is it for Ethereum and the Ethereum charts for right now. However, now that we are going to dive into the other ones, I do believe that we have Tesla to look at just real quick before I end up jumping out of here, just because we had our charts drawn out and I did explain a few things. Tesla is going through, Tesla is going through its own thing as of right now. Not really too proud of what it's trying to do. But we are attempting to break that bull 180 to the top. Like I said, look to your left for the bearish momentum. We are trying to attempt to break that bullish 180 right now. If we can't and we get rejected like off the news, because this is part of the stock market, interest rates start getting intense, then like I said, our 200 or our 205, realistically, I think it was even 210 that we ended up reaching to, that we ended up maxing out at, and I had said that this is too far, it's 215. It was too far for us and that we're gonna end up rejecting to the downside. And honestly, everything started coming back down. I was really hoping for our upside just because we definitely needed that after this so long after going down. However, I guess we're not really necessarily ready. Like I said, respect the pump as always. So I guess we're not ready. I guess we got to find some support, come back down before we can start launching up to the upside. But other than that, realistically, we're going to go and take a few shots. I believe just because there's not a lot going on Tesla, I'm just going to show you guys a little bit of gold here. But we are going to dive into the monthly on gold. Gold has been going up, obviously, but there is a triple top that I'm paying attention to right here. We did get some bearish momentum, pushing to the downside. However, we do have a little bit more pushing. We have our indicators pushing our 20 and our 50 moving average, trying to get us to the upside. If we close below those, then definitely we are going to end up coming down to the bearish side. But if we don't, then I will enter. As you can see, we're getting that bullish cross. I will enter for a long if we can stay as an acorn and get a bull 180 going. That looks honestly like a great play as of right now. 4 hourly not looking too strong, but we're pinching, getting consolidated, looking to push up. Hourly not really too much going on. Like I said, consolidating. It even looks scary here realistically because we could push and break through that 1800 level. But other than that, realistically, there's not too much going on, not too much worry. We did just have a major flush to the downside, so I would just be careful. But other than that, I would just keep an eye on everything. No news has come out. A good CPI could come out in the next few days or in the next few weeks, I'd say. But other than that, realistically, there's not too much going on. I would just stay confident with your trades, stay confident with your analysis, stay to your plan, and execute when you see that you're able to. Other than that, we're just waiting for some more info to come into the data, or some more info to come into the graphs, But other than that, I'll catch you guys in the next one. Ciao.